we have collated the figures of the old tax regime, the new tax regime till this year, and the new tax regime from this budget onwards, and what the difference it will be for you on each of these three tax regimes. The first important thing we have to keep in mind is that we are looking at taxable income. Remember, you do not pay tax on your entire income. You pay it on your taxable income with certain deductions, such as in the form of certain allowances or other aspects like ESOPs and all, which are not included in taxable income. So your taxable income is what matters in this place here. Now, first and foremost, there's something known as standard deduction, in which the government deducts a certain amount from your taxable income and then calculates tax on that. Now, under the old tax regime, you were having 50,000 deducted from your taxable income. So if your taxable income was 6 lakh, you were paying tax on 5.5 lakhs. That was the same in the new tax regime as well. But this time, it has, in the new tax regime, in the revised one, it has now increased to 75%. So if your taxable income for, say, 5 lakh an annum, you will now pay tax calculated at only 7 lakh minus 5 lakh minus 75,000, that is 4.25 lakhs. That's the first big change. Let's now move on to the next important point, which is, of course, where the tax slabs start here. Now, of course, the baseline is that if you earn if you earn salaries up to 2.5 lakhs per annum, you're not paying any tax across any of the tax regimes. Differences start from the next slab onwards. If we continue, we look at what happens in that next tax bracket, which comes from 2.5 to 3 lakhs. Now, here the first difference starts coming in. If you're in the old tax regime, you pay a 5% tax here. But in the new tax regime, both revised and earlier, you are paying 0 tax. The next tax bracket is that from 3 lakh onwards to 5 lakhs here. And here, this is again, it's a constant across. If you earn anytime, if your taxable income is between 3 to 5 lakhs, you're paying 5% across all tax regimes. The next tax slab, and this is where things get quite interesting here. If you move from 5 to 6 lakh, there's a huge difference here. In the old tax, you pay 20% tax on taxable income. In the new tax regimes, both previous and revised, you're paying 5%. However, if you notice, we have an asterisk marks here with the old tax regime. The reason that tax rates are higher in the old tax regime is because you have about several tax-saving instruments included in it, stuff like Section 80C, something like National Pension Scheme. So you can get up to 2 lakh of your taxable income exempted from it by investing under Section 80C and Section 80D. And as a result, your taxable income drops, and on that taxable income, you pay 20%. However, this is what was from 6 to 7 lakhs. Let's go on to the next important tax bracket, or the next important tax range, that is from 7 lakhs to 7.5 lakhs here. Again, you see a slight deviation, 20% you're still paying in the old tax regime, but in the new tax regimes, if your taxable income is in this range, you're paying up to 10%. Quickly, let's move on to the next one, which is from 7.5 lakhs to 9 lakhs, if I'm not mistaken, to 7.5 to 10 lakhs here. Here again, 20% is what you pay in the old tax regime. That is unchanged. But the big change in today's announcement is that if you're in the new tax regime, and this is the amount you pay as taxable income, your tax has come down from 15% to 10%. People whose taxable income is in this bracket, they are the biggest beneficiaries from today's key announcement here. Let's move on to the next tax slab here, which is from 10 to 12 lakhs here. And there again, there is no difference in the new tax regimes, but again, there's a sizable difference with the tax percent of the old tax regime, which is 30% to 15%. And things start stabilizing here. The next tax bracket, which is from 12 lakh to 15 lakh, there you have 30% in the old tax regime, but 20% in the new tax regime across both revised and the current ones. And finally, if your taxable income is more than 15 lakhs, then you pay the same amount of tax across all three tax regimes here. However, as we told you, under the old tax regime, you get to reduce your taxable income significantly by including several tax-saving instruments. So the bottom line still is that if you're earning about less than 6 lakh as taxable income, it's better for you to go to the new tax regime. If you're earning anything more than 12 or 15 lakh per annum, then it is much easier, it's much more beneficial for you to stay to the old tax regime. Anything in the intermediary, we'd recommend that you consult your CA, because it depends on a case-to-case basis. But yes, the biggest takeaway coming from today is that if you are a salary taxpayer in the 6 to 10 lakh bracket, then it's now become a lot more advantageous for you to shift to the new tax regime.
opportunities and
Union Budget 2024, the spotlight is also on what has changed when it comes to short and long-term capital gains. Here's a quick explainer. Short-term capital gains tax was 10%, now it's 12.5%. Long-term capital gains tax was 15%, now it's 20%. Both figures have seen a hike. Listen in to the Finance Minister's logic.
capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term. Unlisted bonds and debentures, debt mutual funds, and market-linked debentures, irrespective of holding period, however, will attract tax on capital gains at applicable rates.
Now, as you can see at the bottom of your screens, we have opened the phone lines for you, our viewers. If you have any comments, if you have any suggestions, if you have any questions as well as to how your tax life is going to be affected by the new regimes or by the changes in the capital gains tax structures, do feel free to call in the number and ask our panel. Our panel joining me right now, I am very honored to be joined by Alok Agarwal, partner of Deloitte India, and Pratik Bansal, senior tax lawyer. We also have one caller, I believe, but I'll first start off with asking a basic question to Alok Agarwal. Alok, your response to the tax structures that we've seen today, it seemed a bit contradictory. When the new tax regime came out, the logic was that the government was encouraging people to save and invest less in traditional saving instruments such as Section 80C or NPS, and either spend the money on in terms of remonetizing the economy or invest the money in terms of stocks and mutual funds. But today, with the increase in capital gains, it seems that that is also now going to be a deterrent. Do you agree with the sort of mixed messaging that we have got from the government so far?
Ritangshu, honestly, I think this was in line with expectations because purely from a low-income salaried taxpayer perspective, it was clear that this government does not want to provide many relaxations in terms of exemptions and deductions under the old regime because they want to move all the taxpayers to the new regime. Now, once we come to the new regime, the simple expectation was that the standard deduction should be hiked in view of inflation. Now, while the expectation was there would be a reasonable increase of at least 50,000 rupees from 50,000 to 1 lakh, but that increase was restricted to 75,000 rupees, as you mentioned. So the other change, of course, as you mentioned, is on the widening of the slabs. So both these put together give a relief of about 17,500 rupees of tax savings to these individuals under the new regime. And the one which is not mentioned too often today, which is a good relaxation provided by the government, is the contribution to NPS of 14% is available now under the new regime. So employees who did not have NPS as part of their compensation structure can look at getting this introduced through their employers and have a reasonable tax saving from that as well. Of course, this would be subject to the overall limit of 750,000 for NPS, Provident Fund and superannuation all put together. So, Ritangshu, I would say, simplification of capital gains tax was expected in the last couple of years at least. That has happened. And there was not too much hope for additional SOPs under the old regime. So, to be honest, nothing very surprising.
Okay. Stay on with us. At this point, we are being joined, stay on Pratik with us. We are being joined by some of the callers. Let me quickly go across to them and then perhaps you as well as Alok can address these views as well. Mohammed Siddiq joins us from Greater Noida, if I'm not mistaken. Sir, please go ahead and have your say.
Sir. Good evening, panelists. I want to ask question, simple question. We are a tax-paying employees. We have
Yes, please go
class doctors. So we were expecting that at least there will be 10% in the slab of 10 to 12 lakh who are salaries. But in this tax, there's nothing for us because they have just merged it 9 to 12, then 10 to 12. So what is the relief we are getting as a salaried employee? We are paying money, we are being, and the shopkeepers are the businessmen. They can show the losses, but how we can show? Because our KDS is getting cut, and every time we are paying ITR, we are filing. So there is no relief for us. We were expecting something for middle class, but I think that this budget is only for some states, and that's what we can understand. So there are panelists who can tell us exactly.
Fair enough. Thank you so much with your view.
Always we are taking the toll.
Yeah, thank you. Yeah. I get your point and I'll put that across. Muralidhar joins us from Nagpur. Muralidhar, please go ahead and have your say.
See, actually, I am a retired pensioner. My age is 72 years. Last time in the new tax regime, my taxable income was 7.28 lakhs. Okay, then I need not pay tax. I didn't pay any tax, in fact. But now my salary, taxable income would be around 7.28. So I will be paying tax around 15%. But I have received nothing. Nah. See, in this budget, it is really I am good for me.
Okay, we get your frustration and we get your point of view, both Mr. Muralidhar and Mr. Mohammed Siddiq. Alok Agarwal come in here because what our caller said is also a view that has been resonating across all our viewers and on social media as well, those who have responded to us on Mirror Now. The concept that anyone who earns above 15 lakh is super rich and therefore deserves the highest tax paying bracket of 30%, and similarly anyone above 10 lakhs earning it is seen as someone very rich. I know statistically they may be in the minority, but when you look at urban India today, most of the salaried class gets an annual income of 10 lakhs or 12 lakhs above a year. And that's not much because it translates to 1 lakh a month. And if you bring in EMIs, if you bring in food and grocery expenses, fuel expenses, rent and other stuff, there's very little savings. Is there a need for the government to change this mindset and also look at this tax bracket instead of only giving SOPs at the lowest end of the tax bracket as it is done today?
Yes, Ritangshu, one can argue that there is a case for, relieving let's say, the lower income salary taxpayers of their burden. But having said that, we know that, the salary taxpayers are contributing to a significant portion of the overall direct tax collections. If you see the statistics in the last 2-3 years, the share of personal income tax is actually growing in the total direct tax collections, and the rate of increase is also much higher than the increase of corporate tax collections. So any relaxations that the government gives to this segment is going to cost a lot to the exchequer. And in the effort to try to balance the fisc and achieve the fiscal deficit targets, the government has taken a view that it cannot afford to give SOPs to this segment, except for what we discussed earlier under the new tax regime.
Okay. Pratik Bansal, come in on that view at this point. Do you share that view, or do you also feel that it's the cash cow of middle class which is being milked relentlessly without any sort of reforms? Because yes, the government wants us to move from old tax into new tax, but there's a reason why many people are still on the old tax regime, because if you get a salary of 12 or 15 lakhs, which is not that much in today's terms, you're still counted in the highest range and you get very little benefits from the new tax regime. Yet year after year, the incentives in the old tax regime are being reduced further. Even now, there's no standard deduction hike for the old tax regime.
Yeah, so basically, they obviously want us to move from old tax regime to the new tax regime. And they are still in that experimental phase wherein they are trying to evolve the new tax regime and make it more attractive. And if you notice in today's budget also, we were expecting that there will be some sort of beneficiation in terms of 80C and 80D and HRA exemptions and your interest on housing loan, etc. But they have completely sort of ignored that situation, because obviously for the simple reason that they want to discourage the old tax regime. So, as far as the middle class income group is concerned, if you see the statistics, we hardly have around 3 crores of income tax filers, as against the population of around 140 crores. So, we still have a long way to go, and the government is basically trying to sort of make things simpler, so that it will increase the compliances, rationalize the tax rates, and overall
Okay.
simplification of the entire structure, so that, because right now many of the low income or the middle income class, they are still struggling with the
Yeah.
long list of paperwork and exemptions and deductions. So they also want
But
to
is it
sort
really
of move
fair?
towards
I understand that it's the government's priority to. I understand it's the government's priority to bring up those who are around the poverty line or those who are in the underprivileged and the backward areas of the society. But should it necessarily be always at the cost of one section society of just 3 crore people? Quickly, two callers. Raji joins us from Bengaluru. Go ahead and have your say, Raji.
Calling you from Bangalore. My
Raji from
big
Bengaluru, are you with
grouse
us? Yes. Yes.
Yes, hi. Big grouse about the senior citizens who live basically on the interest of their term deposits, and they never get a break at all. And they have to, if they have saved enough, they pay a tax on the interest all over again, because they have done so all their lives, saving all this money. So where is the justice for these kind of elderly people? Thank you.
It's a very, very valid point. You're not the first person who has raised that at this point. Colonel Shekhar joins us from Andhra. Go ahead, Colonel, have your say.
Yeah, hello. I entirely agree with the previous caller. My mother-in-law is a senior citizen. She gets her pension. Still, she had to pay 70,000 rupees as income tax after everything else, which is deeply unfair. But my bigger question to all of you is, yes, I agree that the lower or the people who are not comfortable with money should come up, but please tell me, over the last 5 years, somebody like me who's working and also a veteran, where is the tax break coming to us? The new one doesn't give you enough incentives to move over. And the present one, inflation going
Indeed.
up, we are wherever we are 5 years back. How does it help any of us? Thank you.
Absolutely, absolutely. As the popular meme says, "Kare to kare kya?" We are stuck between a rock and a hard, deep blue place. Pratik Bansal, very quickly at this point, what is the way forward? Because as Alok was also pointing out, this is the cash cow for the government, and you cannot expect realistically a lot of breaks beyond this.
So basically, the government, if you see the overall scheme of the things, they have tried to strike a balance between the personal taxation measures and the overall business related measures. Now, they have time and again reiterated their
Yeah.
focus that they're, and at least in this budget, their focus is clearly on the poor, the women, farmers, and the youth. They are focusing on, in fact, in the press conference also, the FM had come up with a slide where the motto of the entire budget was the employment. So the focus is clearly on the job
Yes.
creation and the skill development. They want to move ahead. They want to boost the economy. They are looking at the estimated fiscal deficit of around 4.5% overall to the GDP. So I mean, in the entire overall scheme of the things, personal taxation, while they have tried to sort of give strike a balance, but it doesn't play the pivotal role in their entire decision making. If you see, they are also incurring
Yeah.
a net
And
loss
that is
of
the,
around
unfortunately, that is the reality.
Correct. So
Yeah,
if
that
you
is the
see
reality, Pratik
overall,
Bansal. Unfortunately, that's all the time we have on this show. So we'll have to, I'm sorry, I'll have to end it wrap at this point. But the larger point coming in, Alok and Pratik both agreed with me at this point, is that this is a cash cow which cannot be milked any further. And it's unfair to put the burden of 140 crore Indians on just 3 crore Indians. That's the overwhelming message coming in at this point. But thank you so much, gentlemen, for joining us with your views. It's time for a short break. More news and updates and budget analysis on the other side. Stay tuned.